Hello guys and welcome to the BNK FX trading channel. My name is Andra and for today I will present you an entry based on the market structure, weekend strong highs or lows in a bullish or bearish trend, premium and discount zone, supply and demand, and last but not least, imbalance and liquidity. Here we have a chart with a bullish structure which is made up of a higher high, higher low, higher high, higher low, higher high, higher low, and we stop at this higher high. As you can see, those points are liquidated as the market creates new higher highs. They are called weak highs. In opposition, we have the higher low points, which are strong minimas that form the basis of this structure. The change of the trend is made when the last higher low is broken. Let's see the price action. So, here we have our break of structure, and we are now in a bearish trend. This weak point turns into a strong one. Our first entry could be executed from this supply. Now we have to notice if the price reaches the market zone. This low is not liquidated because in order to have a valid break of structure, the body of the candle must close under it. The wick means a liquidity sweep after which the market can continue upward. As you can see here, the price gives us confirmation of the break of structure, meaning that this previous low is liquidated because of the body of this candle passes over this zone, which indicates that we still have a valid supply area. We are now switching to a 15 minutes time frame to refine this zone. The first point of entry is here, and the second is here. So here we have liquidity, which is present in both of them, and with the help of the Fibonacci tool, we measure 25% of each point only when the area is too large in order to reduce the risks. We set our entrances with the stop loss over those zones with 1 pip and the target being in this low. The first area is invalidated and more liquidity is created for the next. The entry is hit right here. After breaking this low, we will set the break-even. In other words, we will put the stop loss at the entry price, ensuring the transaction. At this moment, we have a risk-free, and the target is reached with a risk-reward of 1 to 10. Next, we are looking for sell positions. Thus, we can see that the price forms signs of imbalance. We have here and here. This imbalance is made up of orders of one kind. For example, in this zone, there are only sell orders. So, we have here a valid supply area for the reason that there is a liquidity under it. Now, we will set the entry price to 25%, the stop loss with a pip above, and the target in this low. The entry is hit, and as you can see, the transaction reached take profit, giving us a risk reward of 1 to 6. Now we go back to the 4-hour time frame to analyze the structure. we notice that lower high and lower low points are created. This is a lower low, lower high, lower low, lower high. This time the lows are the weak points and the highs are the strong ones. In order not to be confused, the weak ones are marked in red and the strong ones in green. This is a valid lower low. You may be wondering why I didn't take into consideration those 2 points. Well, because they have created liquidity under this supply zone. Here we will add a concept that I mentioned at the beginning, which is called the premium and discount zone. In a bearish trend, it is drawn from the last lower high to the last lower low. The dark gray area is the premium and the light gray area is the discount. Finding a supply inside the premium zone gives us an extra confidence that it is valid. We switch to the 15 minutes time frame to refine our point of entry. The first reaction might occur here, but I prefer to find a point at the top of our area. So, we will go on a shorter time frame, for example 5 minutes, to see if we can identify a place where liquidity and imbalance are created. Right here is a valid one. We need to set the entries and see what happens on a larger time frame. The price is aggressively approaching the first point of entry and hits 24 pips stop loss. Our main supply area is not yet invalid because the price should break below. We can have another entry in the opening of this point with the stop loss above with a pip and the take profit at the end of the discount area or lower low. Let's see how this transaction goes. Entries hit. The break even will be set after breaking this low. At this point, we put the stop loss over the entrance. And in the end, take profit is reached. This is how this concept of premium and discount works, being an additional confluence in our analysis. Using those concepts can bring you profitability in this market. Remember that only through hard work and dedication you can succeed in any field.